Welcome to your daily morning briefing, guys. This is the Spy General. This is the War Room, and we're going to be covering what to expect today in the markets on Spy. On this channel, we do not chase tickers. We master Spy. We focus on the S&P 500 and all of the umbrella stocks under the S&P, the MES, ES, etc. Okay? Look, we're looking at a Spy chart today, and I've got some levels marked for this morning. For those of you guys that are not following the channel, please like and subscribe if you're enjoying the content, but let's get into it. If you want to learn how to master Spy, this is a channel that you want to follow because we focus on levels and high probabilities of what's going to happen. Now, if you'll notice here yesterday, here's the high and here's the low. Okay, so this is kind of our box. And then look, we broke down. I don't know if you guys remember yesterday, if you watched it, but I was targeting actually 670, but it did not happen until post-market. But we still got a great trade off of that breakdown. Here's the, the hammer candle, inverted hammer candle off of the morning range here, breakdown, entry 677-ish, 677.50, and all the way down to 673. So $4 move, couple 100%, no problem. Now let's take a look at what we're looking at for today. Here's our pre-market low. Here's our pre-market high. You want to always mark those levels out because that's kind of where, if you guys notice in pre-market, it always gets into that 5-minute squeeze. So this is what's happening. Look at the Bollinger Bands, high tight squeeze here, right in this range between 674 and about 671, about $3. Okay. I don't like to trade inside of the squeeze. And if I do trade inside of the squeeze, it's a whole different strategy. In options, if you're trading options, you want to see it break out because that's what makes options move. Options decay. This morning. Options decay if it's in a tight range, okay? And it's not moving. And you've probably experienced that, and that's why a lot of people lose money in options because they'll buy inside the squeeze and it'll never go to the strike, and then the decay and the theta will just burn out. So we want to look for trend days. If it's looking like a choppy day, we don't want to touch it. And how do we know that? In the first 15 minutes, usually we can get a pretty good tell that the market's going to break out or not. See, yesterday, look, it just chop. 15 minutes passed, I kind of just did this. There was a little move here and then chop all day long. Okay, so not really a great day to trade options. This is when I like to trade the futures, is when I had about a $4,000 day yesterday shorting the MES and the ES because these were a lot of great moves, lower highs, lower highs, lower lows, and you don't get the options theta decay, okay? So this is what I'm looking at today, guys. If we break above pre-market, again, we could be going back to test high of day, 680. If we break below pre-market, my targets are simply this, 665, high OI level. For those of you guys that don't know what that is, it's open interest. And so these are really the targets for the rest of the week. If we break with strong volume, so here's the game plan for this morning. Wait for the first 5, 10, 15 minutes. Let's establish the volume. You want to see volume like this, right? Large volume. It needs to supersede the prior volume. Okay? The prior volume bars. Break below pre-market with a full body candle close below. You want to see it come back, retest. So if we break below pre-market, we're going to want it to come back, retest, and then reject off of this level with a full red body candle close below it, okay? And that's what I would be looking to target, 665 or 660. Now, my bull case is if we break pre-market with a strong breakout above with volume being key. You guys will always hear me talk about volume. This is kind of what I'd be looking at. Another move back up to 680. Okay. So that's kind of our levels today. Watch the market. Make sure that it breaks out with strong body close above or below pre-market levels, and then wait for the retest to come back and confirm that we're staying above the level and with volume. Then you can enter the trade and go for the 680, which is high of previous day, or 665 and on down to 660. Could be a very volatile day, guys, because of all the contraction we had yesterday. Usually with contraction comes expansion. So if we have a really choppy day the day before, usually the squeeze is getting tighter and there's going to be an explosion in one direction or the other. Right now, I'm still bearish, guys. I think we have to see how this plays out. And really, you can just stay neutral until it breaks one way or the other for your nice little 680 strike calls or 665 puts. Okay? This is the SPY General. We are in the war room and where we cover the daily briefing of the market and what we expect SPY to do. Hope you guys are enjoying the channel. Like, subscribe, hit the notification bell, and I'll see you guys tomorrow morning for another SPY briefing in the war room. Take care.